I'm Jing Sima, Senior Economist at the Conference Board, and this is your Economics Watch Brief for emerging markets for June. Global economic activity firmed up in the first quarter, and emerging markets were no exception. But recent economic data pointed to some softening in emerging economies, particularly in the manufacturing and industrial sectors. So, can the strengthening we saw in the first quarter continue into the second half of the year? So far, our economic growth projection for 2017 remains intact. Favorable elements continue to underpin a better economic outlook this year compared to last year. Service sectors in the largest emerging economies continue to accelerate. Household consumption has been and expected to remain solid. In some of the countries experiencing recession, such as Russia, Argentina, and Brazil, consumption has started to improve, supported by slower inflation, more stable currencies, and better job markets. For emerging market exports, tighter job markets and higher wages in mature economies will continue to provide strong demand and tailwinds. In addition, accommodative monetary policies in a large part of the emerging world will likely continue throughout the year. However, we also see two risks that challenge the growth outlook this year: a fragile recovery in emerging market industrial sectors and a political instability. The momentum we saw in industrial sectors in the second half of last year seems to be losing steam. One explanation might be the subdued growth in capital investments. Even though fiscal stimulus and government infrastructure spending have increased in some countries in the second half of 2016, in general, capital investment from private sectors has not picked up. Some of the main contributing factors to this disappointing business investment include persistent political and policy uncertainties, high levels of corporate debt, tighter global financial conditions, slower productivity growth, and lower returns on investments. If business investment doesn't pick up, the recovery in industrial sectors and global trade is unlikely to continue this year. Renewed political turmoil in Brazil poses another downside risk for this year's growth. Corruption charges against President Temer, which surfaced in mid-May, have the potential to damage business confidence and cause ripple effects in Brazil's economy. In the worst-case scenario, our projection of a very modest growth for Brazil this year could be derailed. This in turn would weigh on Latin America's economic recovery. I'm Jing Sima, and this was your June 2017 Economics Watch Brief for emerging markets.